One of the questions I get asked all the time is, I've been through bankruptcy and or foreclosure and or short sale. How soon can I buy a home again? Now, in a lot of cases, short sale, theoretically, you can get a mortgage immediately the day after. If you've missed your payments and then you did a short sale, it becomes a little bit more difficult. But I've personally seen folks who are buying real estate after short sale if they have not missed a payment. Compensating factors. Lenders started out with very tight guidelines. They're starting to be slightly flexible from a mortgage standpoint in order to get the flow of money happening again. If you did a foreclosure, it can take anywhere from 2 to 4 years. Again, depends on compensating factors. I believe that as time goes on, the lenders will continue to be flexible in what they're doing. Same thing with bankruptcy. If a bankruptcy is discharged, you always hear 7 years and 10 years and 11 years and all these years that it's on your credit report. Well, it really doesn't matter how many years a bankruptcy is on your credit report. What matters is how quickly you can get financing again. And the objective here is, if you went through bankruptcy, what do you have to do to buy a house? Again, we immediately want to start getting your credit score back up so you can raise it when the time comes. The lender will approve you after the mortgage. I've seen as little as 2 years. The average is about 4 years. Each person is different. But as you can see, whether you did a short sale, a foreclosure, or a bankruptcy, you can buy real estate again. The objective and what you want to do now is address that you have issues and that you've gone through these things and start to correct them now. Get your credit report healthy and start building off of it so you can take advantage of what's happening in real estate. The great thing about this real estate in this market is we're still, in my opinion, over 5 years away from the market correcting itself. In the meantime, there are amazing opportunities. You don't want to be left behind. You want to make sure your credit report is optimal, and I personally am going to show you exactly how to do it. After all of the dust has settled, whether you've done a short sale and the transaction is closed, or you've done a bankruptcy and it's been discharged, or you've went through foreclosure and the house sold at auction, after all of the dust has settled, it's now time to start with a clean slate. You immediately pull your credit report to look at where you are. And that's where it's important to make sure you have a professional review it with you. Look at what is still causing issues, even though you've gone through 1 or 2 or 3 of what I just mentioned. At that point, you have a clean slate. You start working on building your credit score again. One of the things you can do is get a secured credit card. This is specifically for the purpose in establishing your credit again so you can get a mortgage. You give a bank $300, they give you a $300 credit card. Now, even though it's your money, every time you use it, they're reporting it to the credit bureaus. And after 6 months, it's an established account. We want to make sure that your credit score is being worked on and it's getting healthy. So when the time comes to get a mortgage, the lender sees that you're proactive in building your credit score and that you're back to normal and you're responsible. Another great way to reestablish your credit is you go to a bank and you ask the bank what is the minimal amount they'll take for a CD, a certificate of deposit. Let's call it $500. Well, you give them $500, you now have an asset that's valued at $500, and then you turn around and say, I would like a credit line of up to $500 and I'm going to use this CD as collateral. Well, if you default on the loan, they get to keep your CD. Well, you certainly don't want to default on the loan, but they now have collateral for your line of credit. So when you go to one bank and you give them $500 for that CD, and you then use the CD to get a loan back, you then take the $500 loan that they gave you and you go to another bank and you ask them for a $500 CD. You do that 3 times. You now have 3 credit lines all secured by an asset, and they're all reporting it. These are major banking institutions. So I encourage you to go to a large bank, ask what their minimum CD is, and ask if they will give you a line of credit or a loan against that CD. Now I'm going to show you exactly what to do in order to get your credit score as high as possible so your interest rates on everything, especially a mortgage, will be as low as possible. And I personally will make sure that you have everything you need, and I look forward to helping you get to where you want to be.